I like to look at the world in terms of risks because asset prices don't reflect the world as it is today. It reflects the collective assessment of what might happen in the future. And if your view differs from that, you have an investment opportunity. And then I overlay that with my assessment of what people do. And it's really our desire to put meaning into the market. The key thing here about the central banks in particular is that ever since we weaponized the dollar, we've seen an increased central bank buying abroad. And again, central banks, it's not like they put all their reserves into gold, but they are marginal beneficiary of that. And I think, without kind of ranting on here for forever, the weaponization of the dollar changed the dynamics of the price of gold. What has changed is that I believe we have moved beyond the peaceful era we've had for decades since World War II. And I look at what's happening, be that in Gaza or be that in Ukraine, as symptoms of a new era. And the side effect of the US having been for decades the global police force was that commerce was facilitated, the shipping routes were safe.
Good day. I'm just Steve Yang, learning with you from people smarter than me. And today we are joined by Axel Merk, president, founder, CIO of Merk Investments, a respected voice on global affairs, monetary policy, precious metals, and strategic investing. Axel's here to share some insights on what's happening in the world, where gold might be headed, and how we can position ourselves. Axel, it's an honor to have you here this morning.
Thank you. And you say smarter than you. I don't know. The more I learn, the more I know what I don't know. And so I think any one of us who've been in the markets long enough, we learn to be humble. So if that makes me smart, then so be it. Yeah.
Well, that's I've listened to you. I followed you in different ways, and I have been impressed and really wanted to get your input. Right now, Axel Gold is trading above. Last time I saw was over 4,200. Everyone has their own take. I asked them, what's going on, and everyone I asked 100 different people. I get 100 different answers. So, everyone's got their own take. Want to see what your view is from your perspective. What's the biggest driver right now that's driving the price of gold?
Sure. Well, first of all, I don't have a crystal ball, so I have to disappoint everybody. But what I like to do is I like to look on the one hand, I like to look at the world in terms of risks because asset prices don't reflect the world as it is today. It reflects the collective assessment of what might happen in the future. And if your view differs from that, you have an investment opportunity. And then I overlay that with my assessment of what people do. And it's really our desire to put meaning into the market. And maybe let me start with that with regard to precious metals in particular. We do have the folks who invest because of their concern about the purchasing power of the dollar. We have the diversification investor. We have the speculator, and we have central banks. And that's kind of the sort of investors, and then I'm oversimplifying that I look at. And if I just go through these different buckets, on the gold bug, the purchasing power investor, the key thing about that investor is that sort of investor has moved from the fringe in a global market setting more towards mainstream. It's not like everybody is concerned about the dollar plunging tomorrow, but because the gold market is fairly small, there can be an outsized impact on these small moves. The diversification investor has always been there. The key difference is that an increasing number of investors doesn't believe bonds give them the sort of diversification they've been hoping for. And so we've got more investors from that front. The speculators, those old enough know that gold used to be the nirvana for speculators. And then meme stocks came along, SPACs, cryptocurrencies. Well, as of a few months ago, the speculators are back. They increase volatility. And then, of course, we got the central banks, including, if I can group them into that, some treasury funds of some stable coins. And they're not very price sensitive. The key thing here about the central banks in particular is that ever since we weaponized the dollar, we've seen an increased central bank buying abroad. And again, central banks, it's not like they put all the reserves into gold, but they are marginal beneficiary of that. And I think to without kind of ranting on here for forever, the weaponization of the dollar changed the dynamics of the price of gold. It used to be gold is not correlated to anything really in the long run. It
Mhm.
doesn't mean, but it shifts in and out. These correlations are morphing. But the one thing gold historically competes with is long-term cash. If cash preserves its purchasing power, why would you want to hold this brick, this barbaric relic? Well, you would want to hold it if cash is losing purchasing power. And there used to be a correlation between the price of gold and the TIPS yield, a long-term inflation expectations. And that has broken down ever since we started weaponizing the dollar a few years ago. And that is kind of was the beginning of a wave, and that we are currently in a phase of that.
So let's start with the weaponization of the dollar. And, first of all, uh, I mean, we've been using sanctions for a long time. And that's not new. So when you say a couple of years recently, are we talking with Russia, Ukraine? Are we talking what was it? Extra fertile ground that made this time different? I mean, why? And we've seen sanctions before, so how exactly has this caused such a huge drift in the or in the gold price?
There's a difference when you put a sanction on trade of oil, which may not be effective, or some other goods. It's very different when you start confiscating accounts, when you freeze assets of foreign governments. That's very, very different. And Ukraine and Russia, the conflict there, of course, comes to mind. Um, I'm I'm not saying that those things are necessarily bad, but it changes. The world is run on incentives, and so you're incentivizing the bad guys from our perspective
Yeah.
to reallocate the money, and so that has a huge impact. But since you mentioned sanctions, the other part I do think that's very relevant in the more recent time is tariffs. Um, People are all glued into the flow of goods and forget to think about the counterpart of that, the flow of currency. When you disrupt trade, you are impeding the flow of currency, and you're putting sand into this machinery we call exorbitant privilege, because the money doesn't flow back in as easily, which means our deficits will need to be financed more domestically, putting upward pressure on long-term yields. And a side effect is that we put increased pressure on the Federal Reserve to lower rates, because doing the right thing, which is to cut our spending, is politically less attractive.
So you have sanctions, you have tariffs, we have weaponization of the dollar. We've been talking, or we've been seeing BRICS getting momentum. I don't know what your view is on if you think BRICS is going to gain traction, but I wanted to ask you if you see the world de-dollarizing, or as the current administration would try to push for re-dollarization. Do you see it kind of gaining back traction, or do you see countries continuing to move away?
Well, one of the privileges of being a guest is I can answer the question I want to answer, not the question you're asking. So let me answer a slightly different question. Because
Okay.
the reason I want to reframe it just a little bit, because
Yeah.
the way you started it is saying, oh, the BRICS countries are benefiting or this or that. When to just follow on this sand being thrown into this machinery called exorbitant privilege. First of all, it's not like a light switch that's going on and off. These are relative changes, gradual processes. But the important part here is that people say, oh my God, the dollar cannot lose its status as a reserve currency because there's no alternative. And you're saying, oh, maybe BRICS is an alternative. Well, my point is there does not need to be an alternative. What we see is an increased fragmentation. We see a deglobalization. And
Hmm.
what that means is that the global machinery becomes less efficient. We can still do global commerce. And by all
Hmm.
means, if you have a foreign country abuse its power, I'm not
Yeah.
saying you shouldn't necessarily have tariffs or anything like that, but it does have implications. There are real implications for how this global machinery is working. And so what we have, and then to just layer that on top of it, we have, and it's all related to it, increased nationalist economic policy, not just in the US. China has always had it. You have it more in Europe. They're spending over $1 trillion on defense and whatnot. These are all inefficient ways of running a global economy. It kind of goes against the Adam Smith idea of the invisible hand, because suddenly
Hmm.
you have actors trying to push for winners and losers. And by all means, the winners may well win, but the net result is that everything becomes more expensive. You need to throw more money at your political ideas to make them happen. And so there will be, of course, you can differentiate of which countries benefit and which ones not. The US, of course, being a comparatively closed economy, can quote unquote get away with these things more easily than other countries that really suffer when they're all dependent on exporting to the US. But ultimately, global growth suffers in this process. It makes it more expensive. And then the other thing, of course, is that no major country in the world these days cares about deficits too much. And so this is all it's both the political left and right, right? If you care about
Yeah.
deficits, you fix entitlements. And we have aging populations everywhere. It's a strong voting bloc. And so these are all drivers why precious metals have been doing so well, because it's an increasing number of people that's saying, well, what do we do in this sort of environment? Now, of course, you can invest in the Max 7 and live happily ever after, but if that's not your cup of tea and want to diversify a little bit,
Yeah.
um, precious metals do come up quite regularly.
So you mentioned, first of all, fragmentation. And when I think of fragmentation, I think of two things. One, I wanted to ask you how that's related to bonds not doing so well, uh, or is that related? And then two, in terms of fragmentation, I think of geopolitical tension. It feels like the new normal. Is this likely to be permanent? And are there risks gold investors might be underestimating right now?
So first, with regard to bonds, the main thing is that fragmentation means the universe of buyers is reduced. It used to be that foreigners were a huge participant in buying domestic bonds. With tariffs in particular, that isn't happening as much anymore. And that all else equal provides upward pressure. Now, the other part of the bond market is, of course, the spreads in the bond market of risk assets versus others. That is much less affected by that. A central bank that rescues everybody and anything, and doesn't allow failure anymore. So it seems, has more to do with that, and we can talk about that more. Regarding geopolitics, I'm a believer. First of all, historically, I don't like it when there's a crisis and the precious metals jump. The reason I don't like it is because markets get used to crises, and then there's a bump up and it comes back down. What has changed is that I believe we have moved beyond the peaceful era we've had for decades since World War II, and I look at what's happening, be that in Gaza or be that in Ukraine, as
Mhm.
symptoms of a new era. And the side effect of the US having been for decades the global police force was that commerce was facilitated, the shipping routes were safe. And so it then goes back into to this other mode that conducting business is becoming less efficient, becomes more expensive. Now, a side effect may be there may be more reshoring because it's not as safe or not as easy to get things from abroad. It might be more reshoring. And so I'm not saying it's all negative, but it changes the world. And again, with regard to precious metals, because the cost of doing business has gone up, because of geopolitics being less stable, all these forces that used to be around the world. I think people should pay attention to what's happening to Turkey and other second tier players, that will be more relevant because there's a lot of havoc that can be caused in global trade when some of those countries assert what they believe is their right.
So you mentioned Turkey and other secondary players being key factors. Can you expound on that a bit?
Well, first, I don't want to offend any Turkish folks listening here, calling them second tier, but
No, no,
it's in
no.
the context of.
Thanks for correcting me there. Thanks for
but
correcting me there.
no, I was the one. I was the one who kind of put that in your mouth. But the Turkey historically considers itself a regional power, that's quite influential, and it had been that the US was just so dominant that these other countries would just defer to the US, or if they did something, it would not be so relevant. We have an administration that's far more isolationist. Of course, we look at what's happening in Latin America. Maybe not. They still pick their battles, so to speak. But it also provides quote unquote opportunities for other regional players to reassert themselves, or at least they perceive that they can. And
Hmm.
so that can create tension and conflict in various places around the world. And I think we are naive if we think that our children will experience the same mostly peaceful period that we've had for decades. Um, and I'm not saying that the price of gold is going to skyrocket as a result of that, but I do think a slight premium is warranted when it comes to precious metals because of an overall structural heightened geopolitical risk profile.
You mentioned Gaza, Ukraine, and other not so second tier countries. Like, are there other situations, geopolitical tensions, and territories that you're looking at carefully?
Well, I mean, you try to look at everything, right? Things are not, it's what gets you is always the stuff you don't pay attention to. I mean, everybody is looking at Taiwan and the like. I mean, the thing about it, the reason why I mentioned beginning, I don't have a crystal ball. If you look at any end of year outlook for the next year, I
Hmm.
mean, we all sound very smart, but then if you go back, what drives the market, what drives the world tends to be very, very different. I'm always cautious when we enter August, for example, because August is a perfect place to invade another country. Because it's everybody's on vacation and then you just do stuff, right? Now, of course, then it doesn't happen when you try to pay attention to it. But you've got to think out of the box. What's the sort of thing that is not priced into the market? And it's one of the reasons why I like to talk abstractly, as boring as it might sound,
Yeah.
because it's the risk that something happens somewhere. Of course, we know that Taiwan is a huge risk, but
Hmm.
it's a um, I'm far more concerned about the sort of risk we might not be thinking about. And then the question is, are they relevant or not? Is the failure of a small nation relevant, right, to your securities portfolio? It may not be, or it might be. And so we can always be fearful about the next sort of thing that happens. I like to me, the geopolitical environment is the backdrop. I'm far more concerned about fiscal and monetary policy back home because that has a far more direct impact. I'm far more concerned about the impact that tariffs have on the exorbitant privilege. I'm, and again, it's not like we're losing it overnight entirely, but it puts us down on a trajectory that's not helpful. And obviously, the one thing we haven't talked about as much is because voters are frustrated, they feel that the game is rigged. They're increasingly veering towards populist politicians. Populists address symptoms, not fundamentals, and society as a whole is adjusting along the way, right? I mean, if you think about decades ago, you had one breadwinner in the home, and if you told even not long ago, it's somebody who would be 65 and not retire, you'd have pity with them. Now, You have 65-year-olds who work and they're proud to be contributing members of society. So society adapts.
Mm.
Um, and by the way, it's one problem I have with the stereotypical gold bug, that they say, oh my God, there is an end game and this and that's going to happen. There's no end game. There's always a tomorrow. And the world is
Mm.
adjusting to that. And you want to invest for the day after what you ever might believe is that end game, because it's not, there's no reset, right? The reset folks, they said they don't trust government, but then government is going to fix it all by putting everything back together? No, for the past 100 years, we've gone further and further away from the goal. Believe in a gold standard, have a personal gold standard, but don't think the government is going to rescue you in one way or the other.
So you mentioned voters moving towards, certain people moving towards working on symptoms rather than fundamentals. Can you expound on that a bit?
Well, it's when the traditional one is there is you have fiscal issues and you say you tax the rich, right? And it's not working. You can get a few more cents out of that. The problem is you need to structurally change um, entitlements, right? You got to fix those sort of things.
Hmm.
There is a perception amongst many that government can solve all problems, and economies are way too complex to solve problems. You need to think about incentives and unintended consequences. And when
Hmm.
policymakers don't do that, and it's politically, you love to bash the Fed, you love to bash the bad folks on the left or on the right, depending on what your political persuasion is.
Hmm.
But punishing any bad actor does not fix the challenges we have in the world. It gets you reelected maybe. Um, and of course, because we have free will, we'll work around whoever is in charge in any one country, right? Now, one of the reasons why China is reasonably successful is not because the political regime has a good policy. No, it's because they can't enforce the communist dogma. And the reason why the Soviet Union failed is because they were able to enforce it. And so when you're not good at enforcing your policy, then free spirited people will actually find a way around the restrictions. They may not be super efficient, and there
Hmm.
might be some other problems, and the government might be unstable. And so, similarly, I'm talking from California, and there are plenty of things to criticize about California, but California is still able to attract a lot of talent because of a whole
Hmm.
bunch of other rules. And yes, whenever the state comes up with yet another thing that's hostile to business, some people will leave, but others will find a way around it to work with it. It doesn't mean that it couldn't be done better, that you couldn't get much more growth, much more efficiency out of these things, but we figure out a way to deal with whatever government throws at us.
Axel, you mentioned debt, and you said like it seems like no country really cares about overspending and the debt that exists and their books. But with debt climbing, can we realistically rein it in? Is there a realistic path to fiscal control? You mentioned politicians kind of doing what it takes to get reelected, but what do you expect? Do you expect more handouts in Q1? I mean, where are we going?
Well, there's a fantastic book. I believe it's called "The High Cost of Good Intentions," and it's the history of entitlements. And it's somewhat over the history we've had a pendulum that swung back and forth, but it's not an even pendulum, right? Once in a while, there's a pushback to rein in entitlements, but then there's the next wave that pushes it out even further. And
Hmm.
the time we fix our problems, and history has shown that to us many times, or not the US, at least other countries, is when the market, the bond market in particular, forces people, forces the government to rein in spending. Look at Greece, for example. The challenge we have in the US is that we probably has much more power to quote unquote kick the can down the road than most other countries do.
Hmm.
Which means, to answer your question, I I don't think there's a political will to rein in um, the spending. Now, that doesn't mean you can't have marginal benefits. Take one issue that's on many people's minds is that Social Security trust fund is going to run out at some point. And when that happens, and if Congress doesn't come up with a solution, if I understand the law correctly, what it does is it
Mhm.
actually gives the executive, the president, the power to prioritize. And so then we'll do means testing, presumably. Right? And so that is
Mhm.
a solution. It's not a very good solution, but again, we'll live another day, right? We'll run out of the trust fund. Oh my God, we're bankrupt. Well, um, but then the executive, and it's of course, if Congress fails to do its job, the executive will take on more power. And we've seen that, of course, in history happen many times over, not just on this topic. And so then the executive can say, okay, anybody who has an income below X will get Social Security benefits, but the folks in the upper income will not get any benefits. And that is something that the political process might have decided anyway. But there is a
Mhm.
way to deal with that. The real issue is, of course, that I think the biggest threat to national security, in my view, is deficit spending. Because if you don't have the resources to defend yourself, then
Mhm.
you start having challenges. That doesn't mean there isn't plenty of stuff that you can't cut on and modernize and move in different directions. But to me, deficits are the kind of the one of the key reasons why countries become unstable. And sorry to expand again here, Paul Volcker, who the former Fed chair, he said for countries to be prosperous in the long run,
Mhm.
three he called them verities need to happen. It's sound fiscal policy, sound monetary policy, and and then stable institutions. Now he was a bit of a big government guy, um, and so I have no problem dismantling the institutions that are not accountable. But directionally, I think he's absolutely right. If you don't get those basics right, you're unleashing an
Mhm.
unstable dynamics. The reason why populist politicians, just think of New York, are on the
Mhm.
rise is because people feel that something is wrong. They can't point their finger at it. I had
Mhm.
just a few days ago a discussion with a very bright woman in her 20s. She was surprised when I mentioned both fiscal and monetary policy in a sentence. She said, "What's the difference?" People
Mhm.
don't, I mean, your audience presumably knows the difference, but most people don't know the difference between fiscal and monetary policy. How can you come up with good policy ideas if you don't understand the foundations of finance? And
Mhm.
politicians, of course, leverage that. They use the dirtiest word of all in politics to advocate their case. The dirtiest word in politics, it's a four-letter word. I don't know whether I'm allowed to say it on the air. It's called fair. When a politician says something isn't fair, you should
Mhm.
immediately turn off the volume because whatever comes next is not based on a reasonable argument, but it's just appealing to your emotions.
Ax, I'm going to ask on behalf of listeners, what's the difference between fiscal and monetary policy?
Here we go. Thank you. I asked for that, didn't I? Monetary policy deals with interest rates, the amount of credit in a society, the amount of money in a society. What monetary policy ought not to do, and the Fed has veered away from that, it is not the job of monetary policy to allocate credit to any particular party. That's a political choice. That's fiscal policy. And so the dam, so to speak, was breached already when the Federal Reserve started buying mortgage-backed securities. To me, that's a taboo that should not happen, and I'm a purist on that because
Mhm.
buying mortgage-backed securities favored the real estate sector over other sectors. That is drawing the Federal Reserve into politics. Now, obviously, the pandemic initiatives that provided funding to businesses is absolutely not appropriate for a central bank to do. And what happens is that a central bank to politics, then of course politicians will try to interfere with monetary policy as well. And it's their own doing. And by the way, there's only one candidate amongst the candidates to succeed Powell who has articulated that, and that's Kevin Walsh. He has articulated that he is the one who resigned as Fed governor after 2008. He was in favor of the emergency measures, but says we got to get rid of those emergency measures right away. And Bernanke didn't. He resigned, and for the past how many years was it? 15 years or so. He has been talking about more discipline, getting the Federal Reserve back to basics, getting them out of politics. Um, and so on the fiscal side, you may like or dislike whatever the political flavor is of the day, but those are elected politicians. They allocate money. They favor the rich or the poor, business or this or that. That's what we elect people to do. Change the course of that. Monetary policy is not supposed to do that. And when Fed Chair Powell talked about helping the disenfranchised with monetary policy, that's just ridiculous. That's not in the toolbox of the Federal Reserve. It's not, they don't allocate credit to the poor. Now, what they can say is that, and that's what Greenspan used to say, is that by pursuing a policy of stable prices, that's the best thing you can do for prosperity and most notably also for the poor. And then he should have added that inflation is the most brutal tax for the poor because they get disproportionately affected by high inflation.
So, a couple questions that came to mind. One, you mentioned COVID, and then with that, loose spending, or what's the phrase you used, rescue, or the Fed getting involved in the way they do. Do you How much do you see COVID playing an effect even now? Are we feeling the effects of COVID? And then two, uh, in terms of the place of the Federal Reserve, do you see that changing in terms of not putting the Fed in their place, but like with the Fed acting the way they're acting and seeing themselves as the role to fix things? Do you see, this whole monetary system, the fluctuations, the up and downs, uh, the rising gold, for instance, all changing? I mean, this seems like we're kind of stuck in this state where everything's so unstable.
Let me praise Ben Bernanke, who is most beloved in this audience, I trust. He he wrote a book which was a pain to read, but one of the only good things in that book was that he articulated that when you come from a period of high inflation, it is not a linear process to come back down. And I think that is one of the things one just abstractly speaking has to be aware of. And it's
Yeah.
also why you have this conflict at the Federal Reserve because people just don't trust that this process is properly going. And when you're hit with a supply
Right.
shock, the politically attractive thing is the opposite of the economically sound one, right? I mean, you see it in Japan now. Government is giving stimulus checks to deal with high inflation. It's the
Yeah.
populist thing to do. It's the politically good thing to do. And you asked earlier about kind of what's happening in the economic cycle. Like, and I didn't answer the question, but we have a midterm election coming up, and President Trump floated the idea of a $2,000 check, and Congress seemed to say, not so fast. By the way, Trump is becoming a lame duck president. He is. This Congress asserting itself. The broader question, though, that you're asking, um, and let me go back to Bernanke as well. He wrote this book during the pandemic. And what he articulated is that what has happened since 2008 is an increase in that toolbox that central banks have. And he saw that as a good thing, that you can ever more micromanage the economy. And the one of the most notable things that have happened since is, of course, the bailout of the small banks after the failure of Silicon Valley Bank. Um, Banks, regional banks had mismanaged interest rate risk, and the Federal Reserve said, "Oh, never mind. We'll throw you a lifeline." And
Mhm.
it's a key reason why this recession that everybody, quote unquote, forecasted never materialized is because if you bail everybody out, well, of course you're not going to have a recession. But if you are micromanaging the economic kind of cycle that much,
Yeah.
you're going to have unintended consequences. You're going to subsidize that big business at the expense of new business formation. I mean, you have the economic engine works that when you have failures, the folks were laid off. They start new businesses, and you
Hmm.
need to have that rejuvenation, which is not happening. And I think it is key to see, and Jeremy Powell,
Hmm.
you can think of him what you want. The one thing he was not was an intellectual leader. He did not provide leadership. He didn't even do any in-depth searching as to why they got the big inflation so wrong. And and so if you just have somebody who is going to be a business as usual as an ex-Fed chair, then we'll continue down on that road. All these candidates are somewhat qualified in their own way, but if you want structural changes, there are only the two Kevins, Kevin Hassett and Kevin Warsh. Kevin Hassett obviously appears to be the front runner. The challenge with Hassett is he may be seen as a political appointment more than anything else, and perceptions matter. And also he has been much less open about kind of his overall framework. And the question is whether those structural issues about that quote unquote toolbox that the Fed has will be addressed. The Fed needs to go back to basics. Otherwise, we will go down a road that's going to be very treacherous. Now, obviously, for the gold investor, that's going to be a good thing. But usually, when gold does, and by the way, the one thing that's really quote unquote odd about the current environment, historically, when the price of gold does very well, the rest of the economy does not do well. Whereas this time around, it appears, and I say appears because obviously we have a
Hmm.
somewhat K-shaped economy, but quote unquote everything is up, and that's of course a concern on its own.
So we mentioned handouts, or you mentioned inflation seeming to hurt the poor the most, and so in terms of handouts, it goes to the people who need it, but then the people who receive it, I mean, all it does is it perpetuates further inflation. And does that perpetuate the problem? And what's the solution? I mean, is it just to put the Fed in place?
The solution is the boring basics that the government gets its house in order, that the Federal Reserve gets inflation down, that you figure out how institutions do what they're supposed to be doing. And there are, of course, efforts underway, right? Doge was an attempt to do that. And one thing we haven't talked about is when we talk about institutions, trying to dismantle the influence of the administrative state. And what that does, as far as the markets are concerned, is you can unleash an entrepreneurial potential, right? Precious
Hmm.
metals are now strategic minerals, which means that on federal land, at least, the permitting processes are greatly accelerated. That you can do things to accelerate growth. You do that by adjusting the big levers, right? People complain about housing shortages, and then they introduce rent control to reduce the housing supply even further.
Hmm.
Los Angeles, I understand, has learned how to streamline approval processes, and actually that incentivizes again to build lower cost housing, which then becomes more affordable. But you've got
Hmm.
to go back to basics, address the root causes rather than the symptoms. The challenge is that when you have an unstable trajectory, the
Hmm.
politically attractive choice tends to be the economically counterproductive one.
Actually, we mentioned inflation quite a bit. I had Rick Rule here not too long ago, and he said that there may be no better case for gold than the guaranteed loss of the dollar's purchasing power. You joked that inflation doubled the value of your 2 cents, which I thought was phenomenal. But what's your take on the real story behind inflation? Do you believe the numbers, and where do you see things heading?
Well, inflation is a direct result of government deficit spending. That's what drives inflation at the end of the day. Milton Friedman, I think, articulated that much better than I did here in a few seconds. Uh, and uh, and so, as long as government is hooked on deficit spending, we will have likely inflation. And then, of course, a central bank can try to put a stop on that or a lid on that. The two things I like to mention is that even when Paul Volcker beat inflation, it took years for inflation to be at 2%. It didn't just drop to 2%. It was almost a decade
Mm.
later that we got down there. The other one is that at the end of the day, monetary policy is hostage to fiscal policy. And everybody here remembers the words of Draghi, the former ECB chair, that he'll do whatever it takes. That's what
Mm.
central banks do. Ultimately,
Mm.
they are hostage of fiscal policy. And if government doesn't have its act together. Now, monetary policy can facilitate reckless fiscal spending. Think about 0% interest rates for a decade.
Mm.
Monetary policy is encouraging fiscal irresponsibility. And so there's a lot that can be done to preempt that. The question is what you can do once you're on the other side of that. And I say you go to basics. The same thing on monetary policy. When there's confidence, if you look at the projections that the folks at the Fed do, they don't come down to 2%. Well, so that means something is wrong
Mm.
with how the Federal Reserve thinks about guiding monetary policy. And the way you can go back to basics there is you move more towards a rules-based approach. Instead of having a debating club that's these days debating with data that's just not reliable because they haven't been available or because the policy moves have been so, the gyrations have been so enormous. You've got to
Mm.
go back more towards a rules-based system to rebuild confidence. So there's simple things that you can do. There is no easy path to get inflation down. The other thing, of course, that works. There was an article in the Wall Street Journal that consumers are on strike buying big cars because they're too expensive. So the one cure against high inflation is high
Mm.
inflation. That people are high prices, right? That when there are high prices, people are deciding not to spend money on certain goods anymore. So that in itself can, but that also provides the illusion that problems are fixed when people give up buying the stuff that's expensive.
Axel, do you see a return to the gold standard anytime soon? Is there going to be a Bretton Woods 2.0, a massive change of how we're tethered to gold in some way? And how do you see that playing out?
The odds of that are zero. And I have to disappoint the folks that believe differently. Well, the very foundation of a gold standard is that you have your deficits under control. And so
Hmm.
tell me of course there are some politicians, but which majority politician is willing to go down that road, give up that opportunity that you can spend lavishly. Some countries have institutional debt breaks. Switzerland has it. Germany just decided, hey, what the heck? Let's spend an extra trillion because we need to ramp up defense spending. And this institutional debt break that we constitutional one that we introduced is really we don't really take it that seriously. Now Switzerland is better at than other places, but Switzerland is of course a tiny country, so you can do experiments there much more easily than other places are. But if you don't have the will to live within your means, a gold standard is useless. And with the
Hmm.
sort of entitled elderly we have that want to hold on to their benefits, how are you going to get a political majority to go to a gold standard? I mean, it's a nice thought experiment, but it's not going to happen.
So I hear you saying that the odds of going to a gold standard is zero because you can't find a politician who's worth their salt. Give me one politician. All I'm asking for is one. uh, I do want to ask you about the parallels or the dissimilarities you see between today and the decade-long gold bull run in the 2000s. And do you see a similar trajectory that we can expect?
I see more similarities to the 70s. The and it's of course not the same. The mistakes are not quite as radical, but it is you. Once you've had a supply shock, the political reaction is the economically wrong one for the most part.
Hmm.
And you have in the 70s we had activist governments as well. The government knows what's good for you. They know how to allocate money, and so I mean, one example was to not to be too political at the current time is when Europe decided, okay, we have to phase out the combustion engine, and everything has to be electric. Well, guess what? That works well if you got money and can buy a fancy electric car. But for mass market consumer cars, maybe you want to buy some Chinese cheap car. And by the way, that's going to drive the automotive industry in Europe out of business. And so there are these unintended consequences
Hmm.
when government believes they have the solution. Um,
Hmm.
as government, you of course government has every right to make political choices, but they should be very careful how they deploy them, and they should try to use big levers to do it and to kind of continue to be political. The they If we don't want to cut spending, um,
Hmm.
we have to increase revenue. And there are very few ways you can do that. One
Hmm.
of them would be to tax energy consumption, like a carbon tax. Another
Hmm.
one would be a national sales tax. And politically, that's all but impossible to introduce because the Democrats think it's regressive and the Republicans think it's a license to spend. And so Trump does the national sales tax through the back door through tariffs,
Hmm.
and the idea is to raise a lot of money. The problem I have with tariffs is that it breeds rather than drains the swamp, because everybody will ask for an exemption. I'm a big small business guy. Big business
Hmm.
has a lobby to get an exemption. Small business doesn't. And
Hmm.
so to me, I just don't like that concept,
Yeah.
that if you lobby for something, you can get an exemption. And when you have a broader brush as a policy, it's easier. Now, there's a chance that over time these things will get more institutionalized, and maybe we'll figure out a way to do it. And that seems to be the way to we're progressing. And for what it's worth, you ask what's happening in next year. You want to get the bad stuff out of the way first, and then provide the carrots. And so we've had all these tariffs that were part of this negotiating block. And so maybe we find a way that this is going to now be less in the headlines, and then we can focus more on the deregulation side. And so then we, through the back door, have found a way of significantly ramping up revenue through tariffs, and then at the same time paving the way for businesses to be more productive, through deregulation. So I'm not saying this can't work. I'm just not a fan of any policy where somebody can scream to get an exemption and they get one, because that is not good, in the long run.
So we've spoken a lot about a lot of different things. Love to know a little bit about your Merk investments. Could you give us the 50,000 foot view? What does Merk Investments do? How does your approach help investors navigate today's world?
We manage over 3 billion in gold and gold mining, or precious metals mining. We have a physical gold product. We have a closed-end mining fund where we tend to invest in the more junior companies and help finance them, grow them. We look for catalysts that go beyond just the rising price of gold. Can't talk about the products more specifically, given how my speech is regulated. But merkinvestments.com is our website. From there, you can go to different places. I am active on social media, on Twitter in particular, where you can get my musings. I live tweet when central banks are meeting. I give that as a warning, because I tend to get all excited about that sort of stuff. Um, but that's where I can give live commentary on what's happening. We have a free newsletter. But I believe in what I say, in the sense that I'm a significant investor in my own products, and there's some public disclosure on that as well. But basically, to give a broader context, I actually started a business back in '94. Um, we launched our first public product in 2005. We had some currency products. If you Google me, you'll find a lot of views on currency. Some journalists still call me, even though we don't manage currency products anymore, because I'm on their Rolodex. So I get to comment on the Mexican peso and other things. Um, but but we are these days 100% on the precious metal side. And to just give you a sign of the times,
Hmm.
our assets under management were at, I think, 1.5 billion a year and a half ago or so. And so that
Hmm.
just gives an idea that this market has been quite a bull market in the current environment.
So one more thing, could you tell us about the Van Eck Merk Gold ETF or the ounce? What's your
No,
role in it?
no, I can't because from a regulatory point of view. So
Okay.
I can say that I manage it. My website
Okay.
has more information, but my compliance does not allow me to kind of dive into those details, unfortunately. But go to our website and you can find more about it.
Awesome. For our listeners who want your research insights, can you give it the website information and your handle one more time?
Yeah, so merkinvestments.com and my Twitter handle is at Axel Merk. That's my name. Just spell that.
I will put all the links and information in the show notes. Again, I'm just Steve Yang, learning from people smarter than me. Thank you, Axel Merk, for being on the show. Everybody stay smart, stay curious, stay disciplined. Axel, it's been a pleasure having you.
My pleasure.